the Office of the Comptroller of the Currency is exploring ways to collect more data from banks on their cryptocurrency activity, among other things. Joining us now to break it all down is Acting Comptroller of the Currency, Michael Hsu. Welcome. Welcome back to the show.
Thanks for having me.
Yeah, it's great to have you back. So you had a lot of really interesting comments at FinTech Week, but I want to kind of just get into a slightly different area because I'd really love to hear your thoughts on this. As you know, there has been a lot of drama in the crypto industry recently. And, you know, when you look at, for example, a company like Celsius or something like that, not Celsius specifically, but some of these lending companies, Celsius is the most famous kind of like meltdown. One of the conversations that's been happening in the crypto community is, if Celsius had been regulated more like a bank and had been subject to sort of more traditional banking restrictions, maybe this wouldn't have happened. And that's sort of opened a larger conversation. You know, should some of these crypto companies be subject to banking regulations, and would that have served the function of protecting consumers? And I would just be interested in hearing your perspective on this issue.
So I think it's a great question to ask. And I put it this way, if Celsius was regulated like a bank, Celsius would look quite different than what eventually imploded there. And it's for a whole bunch of different reasons, but banks have to abide by safety and soundness standards. And there's a whole slew of regulations to make sure there's no conflicts, customers are treated fairly, they've got fair access. And because of that, we've got a system that's very well trusted. It's been pressure tested, it's now trusted. And the way Celsius was organized is they commingled a lot of different activities. Some of them were lower risk, some of them were higher risk. And because of the way that ran, all it took was one spark with the higher risk activity to take everything down. And within the banking industry, the way we regulate, we have mitigants to that. We have a way of supervising, so that is a more manageable profile. And right now in the crypto industry, that doesn't exist.
Right. That's a really great point. I mean, do you think, though, that maybe that would have been one of the solutions? Like, you're right. It would have forced Celsius to be a completely different animal. But, you know, like there would have been more, I don't know, transparency, reserve requirements, things like that. I mean, in general, do you think more of these crypto companies should be subject to banking-like regulations?
I think it's up to them. So, you know, I think crypto platforms, crypto firms, they have to decide what they want to do and what they want to focus on. I would say that those who want to run an institution that's safe and sound and trusted, we're here. And we've got, you know, folks can apply to be, you know, an OCC chartered bank. There's other licenses that are out there. I would go back, though. I think there are some real foundational issues in crypto that need to be addressed first. Ownership, custody. There's some really basic things that are still not clear as you're seeing this play out in the bankruptcy proceedings for Celsius, 3AC, et cetera. And if you don't have strong foundations, it doesn't matter what your charter is. It's not going to scale sustainably. And I know that's a goal. If you want something to scale and play the long game, you got to have some strong foundations.
So, Mr. Comptroller, of course, welcome back. And you know, you mentioned the idea of being regulated by the OCC, and of course we had this. It was at Summit Bank that took a piece of it, sold a piece of it to Nexo, which is a crypto company. And I'm wondering, is this something that maybe will not happen in the future? Do you see potentially stopping crypto companies from acquiring banks that you regulate? If not outright taking partnership in it because of the crypto companies having, let's say, shakier finance? Does it create an extra risk when a parent company or a major state shareholder is a potentially volatile financial actor, if you will? Does it create an extra risk for the acquisition of a chartered bank?
It could. The good news is we have a host of safeguards to deal with those risks. And whether that it's through ownership, whether it's through the activities themselves at banks, we have a whole host of mechanisms and tools to ensure that as banks engage in new activities, that we can keep those in a controlled manner.
So if the likes of, say, Voyager had acquired a bank that you guys had chartered. I mean, on the surface, at least, it seemed everything was okay. No one knew that it had these problems with 3 Hours Capital, but of course, they ended up going bust. So, what would have stopped, let's say, a Voyager from acquiring a chartered bank, and what would have, what kind of safeguards are in place in that situation? You say that they're there. But what would really protect not just the account holders, some of the shareholders, et cetera, that are involved?
All right, so the process for acquiring a bank, for chartering a bank, is pretty involved. We have a lot of, there's an application process, and in that process we do a lot of analysis of what the risks are, and are those risks controlled? Is there discipline, is there risk management to ensure that when the bank opens for business, when it opens its doors and it's engaging with the public and with counterparties and investors, it's safe and sound? And we don't allow anything that's not going to be safe and sound. And I could bore you with the details on that, but there's lots of tools that we have to make sure that's the case.
I guess my real question comes down to does being a crypto company, being a crypto finance company at least, preclude somebody from acquiring a bank that you charter?
It's going to depend. It always depends. So, we will look at the facts and circumstances of each case. Yeah, I mean, I should leave it at that. Like our standards are safety and soundness, but we'll look at each case on its own merits.
So Prime Trust, a crypto infrastructure company, recently released a report on the state of regulation in the United States and some of their criticisms, I suppose, levied against the regulatory bodies is that, well, it's unclear which governing body regulates the crypto asset market. There are analogs policing the digital world, and still some misconceptions about crypto among many policymakers. I'm wondering if you could address some of those concerns, especially coming out of DC FinTech Week.
Well, I think a lot of the unclarity is coming from the industry. I think that the crypto industry, I spoke about this yesterday, rests on describing and marketing a lot of its products using traditional finance, TradFi concepts, deposits, accounts, custody accounts, and things like that, which in the traditional finance space are very clear and well understood, and in crypto are not. And I think that part of this confusion is because there are parts of the crypto industry that don't know what they want to be when they grow up. They want to be a little bit of everything to everyone. And at some point you have to decide. And once you decide, we're here, we're ready. We're ready to be open-minded about the technology, about the opportunities, also cognizant of the risks, and we'll engage in that discussion. That's so I don't think it's fair to or productive to kind of point the finger at regulators and say, you guys need to figure this out. I think there's a lot to be figured out, and I think that goes for everybody.
Another conversation that was had is, does a new regulatory body need to be created to overlook the crypto industry, or what exists now is sufficient?
So I think that would obviously be a decision that Congress would have to make. And so I'm not going to opine on what Congress should or shouldn't do in that regard. But I think we do have a lot of tools in place already that can be useful in terms of regulating the industry. I think a lot of it comes down to, on the industry's part, if there are guardrails and gates, if there's ways to control and limit the manner in which growth takes place, we're all ears. What we are allergic to is just, give me a license and let me do whatever I want. Like, that's not something that's safe and sound. And I think there has to be a discussion and engagement about what is a controlled and disciplined way to enable growth. Because so far the crypto industry has sought growth at all costs, and you've seen some of the impacts of that with some of the recent bankruptcies.